Nigel, really starting with you, what are your objections to what's on the table? And I know you do have some. Surely it's hard in this current climate to argue against regulation.
Well, what regulators and politicians have tried to do is to scapegoat the bankers, to say it's all their fault. That, of course, is a very good tactic from their perspective, because what's really gone wrong here is we got rid in the 1990s and the earlier part of this decade of some very sound, sensible banking rules, many of which have been in place since the 1930s, and we replaced it with an avalanche of legislation at European level over the course of the last 10 years. And what we're now saying is, let's have more of the same. Let's have more of this massive legislation with regulators that have no expertise and no knowledge and who go around just ticking boxes. It won't solve the problem, and what it will do, and this is particularly a British interest, it is likely to take away the competitive advantages that the City of London has and damage our biggest business.
I mean, it was left to those with expertise and knowledge and those in the City, and look what happened.
No, it was taken away. The banking regulation was done by the Bank of England, who were experts, and it was given to the tick-box bureaucrats down at Canary Wharf, and they're the ones that have failed.
This is very specific legislation, though, isn't it, Paul Rasmussen,
yes.
on very specific issues?
Yes. This is completely wrong. I'm sure that Nigel will argue next year in spring, when we have 27 million unemployed in Europe, people, that this is due to the regulation of Europe. When the day will come where Nigel will understand that the problem is not that we are having too much European legislation. The problem is we're not having effective regulation at all. And I will not accept an explanation to people saying, you guys, you understand the reason why we have economic crisis now, that's because of Euro's regulation of the banks. It's simply not true. What we need is transparency, responsibility, fighting the risk-taking at massive height, which has created credit loads on companies which are going down now in this crisis. That's why we need European regulation.
But do you accept that over the course of the last 10 years we've had masses of financial market regulation coming out of the EU and it hasn't
Do you accept
worked?
that this European hasn't worked because it has been too lax? That's why
no.
we need a
I see.
and it has been filled with holes.
We've had
filled
10
with
years,
holes.
10 years of
and
failure.
understand one thing, you will be the last guy who will defend these positions.
It's failed.
I would like, can I say that the legislation we had on the Financial Services Action Plan, the 43 pieces of legislation, MIFID and all those, were good pieces of legislation. They were actually opening the market, the European market, and making it work better. And they were beginning to work well, except for this crisis arising on the scene. Now we're rushing into all sorts of much too fast legislation and regulation, which is likely to damage not just the British or London, but also the whole recovery from the economic crisis.
Talk specifics, will you? Let's look at a couple of the
damaging?
measures. What is damaging?
Well, Paul is keen on...
Let me ask you first of all, what is damaging about what you voted through the credit rating agencies, companies that were very much in the frame for causing or contributing to the current financial crisis? Why not?
Well, they've made mistakes, but they, like others,
have made huge mistakes.
Well, they made mistakes in some of their opinions, but they are opinions. It's up to the investor to decide whether or not he invests in A, B, or C.
Getting wrong opinion
well,
from
because he ought to work out his own opinion. He's the buyer. He should invest.
But hold on, they're playing with taxpayers' money. They're playing with our pensions and our savings. Isn't it
your pension manager should be a better pension manager. If he makes a mistake,
let me hear from Paul and then Nigel.
I would say that the hedge funds have been one of the highest responsibility together with the investment banks on this crisis.
No.
That is why, gentlemen, that is why the G20 summit meeting all agree on the point that hedge funds and private equity have to be regulated. John, listen, I respect that you are fighting for hedge funds' interests and that you're fighting for City. But London City and hedge funds' interests, they have to accept that employment and new stability goes first.
Do not understand. The hedge funds had nothing to do with the credit crunch and this financial crisis.
You'll be the last believer in that.
Ever. I spent 20 years in that industry.
And I've spent 25 years
regulating people.
That industry.
Regulating people and getting it wrong. The hedge funds are nothing to do with it.
Nigel, you will be the last believer in this one.
Well, I'm sorry. We've had 10 years of financial market regulation from the EU. It has not worked. We don't need more of it. And John, I would just point out that MIFID and all the other things may have helped us in the context of a European market, but we're in a global market.
And that's the way we've got to talk about now, John.
Right. But Paul's very keen on getting at private equity too. Well, that includes venture capital. Now, we need venture capital to get the market market
We
and
need
get the
venture
business going.
capital, but
Your actions on private equity and hedge funds are going to hit all the people who are investing money and the sovereign wealth funds and all that sort of issue.
No,
John,
you can't be quiet. We want to create a level playing field where investors can be sure that when they invest their money, they're not investing in speculation in hedge fund. They're investing for the jobs
John,
and
if
for
you-
that's what we want to ensure.
John, if you think the issue is with the regulators, would you support the idea of a European regulator?
I think Adrian Turner, coming out of the FSA in his report, I think has said that there has to be some over-surveillance and probably some over-monitoring of the system on a European scale. And also going wider than that, it's got to probably be global.
Okay, so European regulator, you would support the idea?
Well, it's not a formal regulation. It's surveillance and warning. And then the national regulators actually deal with the individual companies.
And
so
by the way,
there's
an agreement on regulating the credit rating agency now.
Briefly, Nigel.
God help the City of London and Britain's biggest industry if we have a European regulator.
To find out more about who we are and what we stand for, go to the UK Independence Party website at www.ukip.org.